Welcome back to Compound Thesis. Super excited today. Our guest is Pat White, and he's the founder and CEO of Bitwave. How's it going, Pat?
It's going great. Thank you so much for having me today. This is really fun.
Yeah, no, super excited to dive into what you guys are building, and yeah, for the listeners that are not too familiar with Bitwave, can you just give us a little bit of the origin story and your background and journey into crypto?
Yeah, of course. So, a quick intro to Bitwave. We are the world's leading number one and first digital asset finance platform. But really, we are a back office tool for businesses that use crypto. So, if you are a business that uses crypto, we have a bunch of different tooling that can kind of help you out from tracking, accounting, taxes, financial operations in terms of payments, all that sort of stuff, and more helping with some of the data requirements that businesses are running into. So, we are a sort of a full service financial information and reporting tool for businesses using crypto. I've been in crypto for a pretty long time actually. So I got into crypto all the way back in 2010. And I actually have some code contributed to the Bitcoin Core node, and I was pretty the first time I read the Bitcoin white paper, I was pretty taken by it, to be honest. I was very impressed by it. I suppose I sort of joke about this. I suppose I had a few more libertarian leanings back in my day than I do now, but there's still, it's honestly, there's one of those things. Crypto was never about the libertarian aspect to me. In some ways, it was always about how much I kind of hated the banks, to be honest, because I just, always had the worst experiences with banks growing up and through my life. And so this idea of a much more individual self-controlled destiny when it comes to your money, it just makes so much sense. And you start to dig into those kinds of things. You ask yourself questions, like in the moment in time we're in right now, you do ask yourself questions like, well, why can't I just give up yield and have a bank account that is reliably not going to evaporate if there's a series of bank failures? And so I sort of got into crypto early, really liked it. I'm an enterprise software guy, so my entire career has been. I started at Microsoft, and it's always been enterprise software. Well, I had a very brief sojourn into online poker. I worked for an online poker company for a while, but then the CEO got arrested, so that was a short-lived adventure into a different world there. But in enterprise software, was looking for something to do in crypto for a long time. And finally, about 2017, you start to see businesses really getting into crypto, like actual businesses with real addresses and boards of directors getting into crypto. And so I figured it was time. And my co-founder and I sat down and we wrote a list of 20 or 30 different problems that businesses are going to have around crypto. And we've just been banging them off one by one. So tax and accounting are the first big ones you run into. Really, accounting is the first one because that's what businesses do that individuals don't. Tax is then sort of a quick follow on behind that. And then everything else in the world you have to worry about. So, payments and data and APIs and smart contracts. We tend to think a lot about what's the world going to look like when someone like Walmart and Microsoft are using smart contracts. It's going to be a crazy world. So that's a brief history of Bitwave, a brief history of myself, and a little foray into online poker's drama over the years.
Yeah, I mean, I think a lot of people are also realizing the benefits of crypto and with the recent explosion of different banks and the kind of issues that we're seeing in the system. So, it's good to see that you guys are tackling things from an enterprise perspective because there are a ton of businesses that are being built in this space. And so, as you talk to your customers, if you look at just the accounting or tax, problems that you're trying to solve for, how do you guys deliver solutions around that? Because I'd imagine that, a small, medium business typically is built around a lot of QuickBooks and a bunch of bookkeepers. How is that similar or different in what you guys are building in this space?
Yeah, exactly that. I mean, it's the goal for us is to really help you get stuff into. So there's a couple of things. Accounting's fun in the sense that tax is not fun, right? No one likes their tax product, and this is why the retail tax market for crypto is such a miserable market because no one likes paying taxes. You do it under extreme duress, literally with a gun to our head once a year, and it's kind of a miserable experience. No one likes it. Accounting is a little bit different where accounting tells you how much money you're making. Accounting is interesting insight into your business. And if used correctly, it can be that. But it also is net overhead because you know what your bank account says, if you're selling more than you're spending. And so there is this aspect where it's both overhead, but also really important for your business. And we just try to walk that line. The biggest thing that we're doing is sort of the data aggregation piece. Every one of our customers has data spread across 10, 20 different chains, exchanges, different places, custodians, and getting that only one place is very, very, very difficult. It seems like it should be easy because it's the blockchain. Like, it's all data. Why is this hard? It seems
Available,
like it's so
right?
we show, yeah, but in fact, you run into every form of different problem you can have with data acquisition from custodians and exchanges and the blockchains. And, oh, they don't, Solana doesn't expose this one particular type of reward that one of our staking providers needs. So you have to figure out a way to get that reward into the system, and they don't take no for an answer. They're not like, oh, okay, I understand that their API isn't very good. We'll let you off the hook, buddy. No, like, you have to figure out how it is because your customers, and that's what they need. So our whole goal is to basically bridge the gap between the digital asset world and your general ledger, very intentionally, so that you can kind of use your general ledger for what you need. So if you need to go in and run reports on your P&L, look at your balance sheet, figure out your 1099s and how much you owe to your contractors, all that data gets into QuickBooks or NetSuite or whatever you work with, and we're just really providing it, and doing that kind of bridging of the gap between point A and point B there. So that's the idea, but it's a lot of technical problems.
Yeah, I can imagine that. I mean, it's almost like the ledger of all ledgers. It sounds like,
Yeah.
where you're aggregating a lot of this information. Could you give us a little bit of an idea of like the scope or scale in terms of, the different types of chains that you guys are plugged into? What kind of
Yeah.
volume you guys look at? I would just be curious.
It's incredible. So in terms of like, there's two kind of ways of looking at it. One is like how much we index, and then the other one is like how many transactions we run through Bitwave. A good example of a obscene chain is Solana,
Mm.
which is up to this point is about 74 terabytes, and they're expecting as load increases, they're expecting to add about petabytes, 5 petabytes a year of new data. So on a pure data perspective, it is relatively crazy, the data scale, the data growth on this side. So that's one piece of it. In terms of transaction volume, it's another really interesting part of our business. It's something that I really love about our business is, startups are fun because you sometimes get to see in the future. Whereas everyone else is kind of like dealing with their current customers, we're dealing with new problems that other people aren't really dealing with. We have customers that are 12-month-old companies with a finance team of like 2 or 3 people doing 250 million transactions a
Hmm.
year. Like that'd be something like Magic Eden. That is unbelievable from a perspective. I'm at this conference right now. I was just talking to someone who specializes in payments, and we were discussing that, coming from the traditional world, someone like 250 million transactions a year is probably what a regional grocery store does. Now, I say that where there's like no regional grocery stores left anymore, like they all belong to Kroger's or something. But
Right.
like, you imagine like Safeway, which is like California, Nevada, a few other places like that. They probably were doing about 250 million transactions a year, and that is a 60-year-old company. They grew up in the paper transaction world and all of that. And they have a finance team of probably 50 to 100 people doing that. And they had 50 years to build up that infrastructure and all of that. And then you have something like Magic Eden that over or OpenSea that overnight went from nobody, one person kind of doing finance as a side hustle in the company, to having to really have a very, very mature, enormous amount of transaction volume and a very mature process to handle it. So it's really interesting world. And I kind of am of the theory that this is a trend across the universe. Like, I don't think it's just crypto companies that are doing like more and more transaction volume. I tend to think that the cost of any given transaction, because of the blockchain and that existence, the cost per transaction is just going to plummet. And I don't mean bips or like paying 7 cents to do a transaction. I just mean like how easy it is to programmatically do a transaction.
Mm.
We haven't really gotten to the true world of like high velocity programmable money that some of us thought we'd already be in now. And so the high level for us, we just think that the transaction volume of the world is just going to explode. And we sort of have designed our whole system to be able to handle that.
And so, like, what comes out of that data set aside from just the accounting and tax implications? Like, you say like accounting can also be much more viewed as an asset versus a
Right.
chore. right? And so I imagine that there's a lot that a small team can glean in terms of insights into where their business is heading, that you guys could help from a strategic finance perspective. Is that true?
Absolutely. I mean, the way Bitwave works is you actually can hook up a spreadsheet. You can hook up like a Google Sheet to your data. In addition to like our UI and stuff like that, you can hook it up to your data warehouse. And we have customers doing a lot of FP&A work on that because
Mm.
honestly, crypto is incredibly difficult FP&A work. And I think even like almost like underappreciated because most businesses don't hire FP&A folks till pretty late in their life cycle. But in the crypto world, you suddenly have a lot of really interesting risks. You have counterparty risks from the networks that you're on, counterparty risks from the custodians you're on. You have network level risks from the volatility of the coin, protocol risks. So for someone like Magic Eden, OpenSea are great examples here. All of their revenue is in crypto. Most of their expenses are in USD. So you're suddenly overlaid of we need to plan for the next 12 months. We need a budget that is denominated in crypto, where revenue is denominated in crypto, but expenses are denominated in USD. And we need to basically plan for what happens if crypto goes to a million, what happens if crypto goes to zero, and plan for everything between those two things. It is a really hard FP&A job. But we have a lot of tools to kind of help with that. I wouldn't say I think we're still figuring it out, to be honest. Like I feel like we as an industry are still deeply figuring out what it means to do complex FP&A around this because there are analogies. Like Forex is a good analogy where people have FP&A teams that analyze their Forex exposure and make recommendations. But at the end of the day, like Forex doesn't move 50% in one day, right? Like it's just a different ball game when you get into crypto. So you have to have different types of risk exposure. Like you don't have counterparty risk in terms of like if the market went down, would you literally like liquidate the entire brokerage that is sitting on your options that you're sitting on? Like there's really hard, or does FTX suddenly disappear overnight? So I think we're also trying to figure out exactly how to do good risk management, good FP&A on top of crypto. But we're doing our best. Like we're trying to get the tech into people's hands so that they can start figuring it out.
So you mentioned a couple of times like some of the NFT marketplaces. Can you break down a
Yeah.
little bit about what your customer base looks like? Because just looking at the logos on your website, it spans a pretty wide gamut.
It's the most interesting startup I've ever been involved with because we sell to Fortune 50 companies and we sell to two-person mom and pop DeFi shops that are just like dipping their toe in the water here, which is a really interesting market. It's hard to price. It's hard to there's like a million things that make that really hard for a startup, but it is super fun. We do everything from really, really crazy DeFi pools, tech, opens a client. They are a on-chain options protocol, really fun stuff like that we've had to build really robust DeFi handling for, all the way up through the biggest companies that you've heard of doing digital assets are probably our customers. We can't usually talk about them due to NDAs,
Sure.
unfortunately, but we have many of them listed on the website. Like GameStop's a good example. So it covers the entire range. I'd say the thing that unifies them all is they have expenses and revenue in crypto, some form of it. If all you're doing is you buy a load of crypto, you hold it, and then you sell it, like almost like it's an investment, you actually smell a lot like a retail investor. And most people we deal with might even just do that all on spreadsheets. Like I know MicroStrategy does this all on spreadsheets. So it is kind of an interesting world where there's a lot of people that if you're just buying and holding, that can be spreadsheet driven or even traditional asset management tools. It's as soon as you're transacting in crypto that things get really, really, really tricky. And that's where tools like Bitwave really come in, where you're actually like day-to-day transacting, getting that revenue. That's where you have to do it. And that's where you also are picking up really complex liabilities. Like a lot of the people that are in this space, they get revenue and then they owe part of that. If you're a miner, a lot of the times the way miners work is they get revenue and then they basically owe a portion of that back to the mining facility that they're in, like if they're co-locating. So they do like a revenue share. That's really complicated accounting. Like it just to do that on a asset that you have to fair market value or you have to impair like digital assets makes it really, really tricky accounting work. So everything up and down the stack. And honestly, the best thing about Bitwave is everyone here just loves this stuff. Like all of us own NFTs. We all YOLO'd into every DeFi protocol during the DGen summer. Like we really, really love this stuff. So it's fun. It's fun getting to work with the companies that we really like their products. You know what I mean?
Yeah, absolutely. I mean,
Yeah,
you
Compound is a good example.
Yeah, sure. No, you've got a lot of empathy for what your clients are doing on a daily basis, as long as you're participating in the ecosystem alongside it. And then I would imagine, a lot of the complex challenges that you mentioned there is like converting back to some fiat currency as well, because like you said, a lot of these are businesses that have U.S. dollar liabilities, but
Yep.
potentially crypto assets, or even just the AP and AR that you're constantly monitoring for them is kind of like a big foreign exchange exercise 24/7.
It's a really complicated one, but
Yeah.
we love it. I mean, we see this year we see a lot happening around ARAP. Like we think that this is gonna be a real year for payments. You talked about stable coins. We briefly touched on the banking crisis, but like stable coins have really come out. If I had put together my crypto bingo card for 2023, I don't think I would have put stable coins on there. And yet stable coins have come out as this really interesting use case. Like I love when new use cases pop up in crypto, and the idea that I can pay $1 and get $1 back that is spread across 10 banks and T-bills is really, really powerful. And I think we're all realizing that right now. So I think stablecoins are about to have a new heyday here.
So do you see that, and we talked about that in the use case of like AP and AR, but are you seeing that in terms of payroll as well? Is that
Yep.
potentially an application that you're seeing, clients?
April, yeah, AP payroll. I think US payroll is a relatively solved problem. So we don't see it too much for people trying to replace they're not trying to replace
Unless you bank with
escrow,
SVB and you're not
unless you
sure if
bank with
you're going to be able to
SVB.
get your money out for next weekend, right?
Yeah. Um, and even like when you get into some of the really tricky stuff like streaming payroll and things like that, it's not really a problem that a lot of people necessarily have if you are in the US working for US companies.
Yep.
Where payroll becomes incredibly important is as soon as you're working in the US for non-US companies. So, or in the not you have a US company working outside the US. So
Right.
that's where payroll is still very, very complicated. It's very expensive. Working with Deal or any of these guys, there's a very high cost that you pay for their service. And there's a very real world where we're going to see that start to kind of go away. So I don't know when we're really going to see payroll pick up in the US for US citizens from US companies. If that ever becomes a major thing, maybe. I mean, I think it would be like an opt-in thing for kind of fun. Like people would prefer to get and self-custody their money rather than go through a bank, which I can understand. Because again, I don't really like banks all that much. So
Yeah, especially given all that's happened recently, I think self custody becomes much more of a priority for people. And
well,
so,
and like I mean, it's a great example of like it's such a cluster of an industry in the sense that like of a problem because like with SVB is a good example. You can't change your deposit, your direct deposit bank account in 12 hours. Like that's not how
right.
it works. Like you change your bank account, it takes a week or more. You fill out a paper form, you send it to someone, like you get the 2 1 penny deposits, you have to report back.
Yeah.
Like, and so on a day like this where everyone is scrambling madly to leave a bank, you are really SOL if you have direct deposit into that bank. And then the other side, of course, that I think about a lot, which is unrelated to all of this, but it does bother me deeply, is we actually so at this point we work with First Republic, a couple
Mhm.
other banks just for diversity, but like I love my First Republic banker. I love it. Like I get beers with him. He's a genuinely good human being, and it is. But with the way the markets are working, where suddenly everyone is so incentivized to flee to Citi or Bank of America, it really kind of depresses me to think about a world where like regional banks, regional high touch banks with good service can't exist. Like that really depresses me deeply, and I'm worried about what happens. Like I'm really worried that we're just going to be in this world. The more you get to these too big to fail banks, the more we're just moving to nationalized banks. And again, like this isn't a libertarian argument. It's just like if we're gonna have nationalized banks, like let's just have a national bank. Like why are we like playing all these funny games? Like someone create a national bank that doesn't do reserve banking, where you're guaranteed to have access to your money, and then like let's just let people compete with that for yield and things like that. So it's just kind of a weird. We're in a weird time right now. You know what I mean?
Yeah, no, absolutely. But I think a lot of people do value the relationship that you're talking about there. And so, one way that you mitigate this regional bank crisis, right, is having more transparency on the liability side of their balance sheet. And
Yeah.
I think a lot of these institutions certainly want to continue to stand up and provide the great service that they're doing. But unfortunately, the way that the accounting works, and like you probably know this better than I do, given you're living and breathing this every single day, is that the losses that were piling up on these balance sheets, given the quick move in rates, just wasn't visible until it was too late. And then because of the speed of information that flies around so quickly, especially in a concentrated deposit base institution like that, things can move out of the bank really, really quickly. And unfortunately, that kind of creates this domino effect instead of having some loyalty to an institution that provides a great service. So
for what's worth, I think banks have something to learn from crypto companies. Like, I don't say that all the time, but like, I think a world where we start to see proof of reserves proof of reserves is not a great term. I don't love it. We tend to call it polar, proof of liabilities and reserves inside of Bitwave. But this idea of high transparency into your banks is incredibly powerful. And I think that this crisis is going to, between FTX and then now the actual regional banking crisis, I think we're going to start to see a push for a lot more transparency. And I think that there's a lot for the banks to actually learn from crypto in terms of what we have tried for transparency, what's worked, what hasn't worked, how we think about this problem in the abstract. I mean, there's a lot of really good stuff to learn. There's stuff that crypto companies can learn from the TradFi companies as well. Don't get me wrong. We're not
absolutely.
we ain't no princesses over here. Like, we're not like perfect. But there's a two-way street there for them to learn from, kind of like how we're thinking about this problem also.
Yeah, but I think that I mean, it goes to the point where I think you're following the same path that Compound is as well, which is trying to engage from a regulatory and institutional perspective, because there is so much benefit that both sides can learn from each other, from a from a technology, from a relationship, whatever the different perspectives are. That it's not a zero-sum game necessarily.
Exactly.
Yeah,
It's not a zero-sum game. And honestly, I still pretty firmly believe that the way that most people will get access to digital assets will happen the first time, we have 7 billion people in the world, almost 8 now. The first time most of those people will touch digital assets, there's one of two kind of ways I think about it. First of all, I think in a lot of cases they won't realize it. So they'll buy stock, and DTCC will settle that using the blockchain, and they will have literally done a digital asset transaction without even realizing it. Or they go to, Bank of America launches their own Venmo competitor. They go to send money. That all happens over the blockchain in the background. They're not going to really realize it. The other one is they go to Wells Fargo, and in app they can buy Bitcoin as just with a one click. So I think we are going to see major uptick by the financial institutions. There's too much pressure. There's too many reasons to do it. There's too many good reasons. There's too many reasons not to do it, I guess, is a really good way to think about it. So we are continuing to see this uptick in major financial institutions, even if like this year they all kind of like pump the brakes a little bit, or kind of looking around like scared deer, making sure the mountain lion is not going to get them get them this year. But everyone is still looking at it.
I mean, you're at FinTech Meetup right now. So I think the FinTech space, we can learn a lot from that as well. And that's kind of my background. Oftentimes it was a very adversarial relationship between the banks and FinTech, right? And there was all this talk about disruption and disintermediation. And ultimately, like, the FinTechs that win, either get a charter through acquisition or through registration, or there's a partnership that's built there between the two, because of the trust and security and the all that can be learned from the innovation on one side and the foundations that are built on the other side.
It's such an astute observation, because at the end of the day, what's happened is banks, like, this gets back to what I'm saying, like, banks are not businesses at this point. We might as well just think about banks as public utilities. Like, they really are. Like, the way they're backstopped by the government, the way that they're regulated, everything that happens. Like, banks, it is hard to call a bank a business anymore. Like, they are a public utility. And so at that point, like, you can't compete with public utilities, right? Like, you can't go. I mean, you can try, but it's sure hard to go and start your own water company in your city. Like, people do it from time to time, but it's not a great business model. So you're just going to find. I mean, at the end of the day, it's going to be what kind of value adds could we do on top of the traditional banking sector is how FinTech has to think. FinTech's hurting right now. I mean, the VC funding in general is 90% down. FinTech funding itself is probably more than that. They're in a lot of pain right now. A lot of companies overcapitalized over the last couple of years and at valuations that are too high, honestly, for the kind of what they were doing, the work they were doing. So we're seeing a bit of a reckoning right now around fintech, uh, and really all startups. Like every
Yeah.
crypto startup raised at a unicorn valuation that's now trying to like make sure that they can back in. They have to be able to back into that valuation in a couple of years, or risk doing a really nasty down round or something like that. So it's not a great time for founders. But this is when startups are fun. Like you want your startup to be. It's great startups come out of kind of distressed situations and hard problems. So
Yeah, no, we're definitely in that environment across many
yeah,
different sectors. Right now, it's not a crypto specific thing. That's just, the macro environment that we're in right now, given what's
yeah.
happened with inflation and central banks. So, yeah, I totally agree with you. And I think the good thing that we probably both hang our hat on every day is that the capital talent, or maybe not the capital right now, but the talent at least is staying in this space,
Oh yeah.
and very much doubling down on the work that's being built. And so it's good to see everybody rallying around and
Oh
continuing to
yeah.
perform.
People
Um,
people are passionate about this stuff because it really does, it touches on this idea of self like not sovereignty, but this idea of self
Ownership.
determination for finance. You know what I mean? Like that's everyone more and more of the world is like, not to get too deeply philosophical. I mean, like the world more and more happens to you. Like that's just the way it is. Like there's just more and more stuff is out of everyone's control. Like more and more things just happen to you as an individual. That the idea of finding something like crypto that you can bring a little bit of that control back to your own life is, I think, it's very appealing, and it's very appealing in like a nonpartisan sort of way. Like this isn't about Republicans or Democrats. I mean, it's about people who just want to find parts of their life they can have a little more control over.
Do you think some of that's somewhat of a byproduct of financial literacy increasing in this day and age?
So let me ask you a question: is financial literacy increasing?
Well, there's been a bunch of attempts to it, but I have
Yeah,
not.
I
I haven't
actually
looked at
have
the
no idea.
data, to be fair.
I honestly have absolutely no idea.
Yeah.
I mean, I know literacy in general is not increasing, so it's hard to imagine that financial literacy is
Yeah.
increasing.
Well, I mean,
Um,
now we have all this AI. I don't know if you're going to need any
why
literacy.
read
Period.
when just someone will, yeah,
Correct.
easiest thing in the world. No,
Yeah.
it's a great question because I don't know if financial literacy is increasing. I think awareness is
Sure.
increasing for sure. This idea, like, so literacy would be, I understand what fractional reserve banking is. I understand the bargain that I'm making with my bank for my 3% yield. Financial awareness is, hey, there's a 3% yield at Ally. I'm going to put all my money there. I have no idea that it's because they're bankrolling, Americans buying more cars than they used to, and like that's an incredibly unsustainable like consumer model
Credit
for me.
risk. Yeah.
Yeah, like so there is this relationship part that like there's a lot more awareness that like there's been a change in how, I go so far as to say the really interesting part of like what you said is there has absolutely been a change in how financial products are marketed, right?
Sure.
Like we went from a world where there really was very minimal B2C marketing for financial products. I mean, it just wasn't that interesting. You had a bank on the corner, you went there, you got a checking account. Maybe you went to that same bank and got a mortgage. But now, with the neobanks and all of the like Robinhood, the neobanks, everyone like that, there is this like constant stream of advertising towards individuals about financial, and it does create really interesting situations. Like I'm not sure financial literacy is going up, but I almost would guarantee you, if you asked people if they thought they were more, if you did like a test, it's like, here's a hard financial literacy question. Do you think you're good at financial literacy? I'm sure that number is going up. I'm sure that just
Yeah.
because there's so much media we consume around it, everyone thinks they're getting better at financial, but I'm not sure everyone actually is, because it's such a weird slice of life or such a slice of the financial system that actually gets exposed to people through this constant barrage of advertising.
Yeah, but also there's also, if you look at the nerd wallets of the world, right? There's so
Yeah.
much financial educational, there's material out there that can be
Yep.
digested by consumers that was never really available, and that becomes more and more accessible.
It's
And
a great point, because
yeah,
I mean blogs have changed the
for
nature
sure.
of financial literacy. Yeah, and
Yeah, I mean,
education.
I was boarding a Delta flight this weekend, and one of the things that they put on the side of the plane was that they were highly rated by the Points Guy, and the Points Guy was just a blog that was built, about credit card points, right? And so
Yeah.
it's amazing how much this information is there, and but also like to your point though, like the switching costs are extremely low, and I think you
Yeah.
also are earlier in the conversation, you said about your relationship with your First Republic banker. I think that is a very, very, very unique point of view, because I don't think a lot of people realize that there was such a thing as a relationship banker.
Yeah, back in the
And
day.
yeah, but it's no longer that, and it's more just kind of going through your Robinhood account or whatever app that marketed the best to you and got you to convert as a lead.
I hope it comes back. I think it's a
Sure.
really good way to look at the world. I think that like a lot of people would take lower yields in return for someone they could call and they had more relationship with. I don't know if
Yeah.
that's true or not, but that certainly is my feeling on it.
Yeah.
Yeah, it's an interesting time in the world, man. It really is. Like I tend to think a lot about interest rates anymore, which I didn't really spend a lot of time in my life thinking about, you know.
Well, I
You and
never
I
had
you
to. I mean, yeah, I mean, I came out of school in 2008, so I've never known what interest rates were until now.
Yeah, I mean, you and I are kind of about the same age. You're a little bit younger than me, but like literally the only period of high interest rates in my entire life was this like 6-month period in 1993 when something was going on with Clinton. It doesn't even matter because it was a blip in the radar and then they went back to zero. I mean, like from the day I was born until like whatever 6 months ago, I lived in a world where interest rates were zero. And now we're seeing the knock-on effect of that change. And
Yeah.
it's really weird, right? Like it's even for it impacts compound, it impacts your business, it impacts SVB was a direct failure because of interest rates going up in a way that I guess no one really thought interest rates would go up. Like just no one sat down and really thought about it.
Yeah, which is really a shame,
Yeah.
because in that case there was not as much. I know, I think the stories have been told numerous times, but there was not a chief risk officer in place for almost a year at that bank, and so risk all of a sudden now is very much a high priority and something that needs to be much more at the
So
forefront of
hot.
minds. Yeah, it's unfortunate that now all of a sudden that becomes. But when you live in a bull market forever, it never really became. It was a concern, and it was the same thing with the crypto space, right? Because counterparty credit risk was never really a concern, and liquidity was just available at your fingertips, and then all of a sudden your counterparties were falling apart because of duration mismatches in their portfolios, and here we are today. So yeah, it's
Yeah.
it's a totally different environment.
Yeah.
Um, well, Pat, this has been awesome. This conversation definitely went a different direction than I thought it would, but in a great way. It's been awesome chatting with you, and I know you've got a bunch more meetings at the event that you're at today, so I'll let you go.
Meetings
But
all day.
yeah, any takeaways or closing thoughts before I let you go?
No, it's spectacular. Thank you so much for having me on here. It's always a pleasure to chat with you. Have me on anytime you want to talk interest rates.
Let's do it.
Always fun, man. This is great. But I think, look, I mean, only closing thoughts. I think we're coming out of it. To be honest, like it's the funny part about this pod is like record this a week ago, and like you and I are both probably like bottle of scotch, like what the hell's going on in the world. Record today, and suddenly we're back in a bull market. Bitcoin is almost at 30K today. Again, based on this idea that that finally people kind of remembered why they really like Bitcoin in a funny way. So
I think
what we got
everybody
to do
went
is
back and looked at the Genesis block, right? Chancellor's
exactly,
on the second brink of a bailout, so or brink
exactly.
of,
So
yeah.
we got to do this 6 months from now and see if we're back on the bottle or if we're happy still. So
Well, we can cheers either way.
or both. Yeah, exactly. Why
Yeah,
not both?
exactly. Whatever the outcome. But either way, no, it's been a pleasure, Pat. I really appreciate it. And thanks everybody for tuning in. If you want to check out other episodes, listen and subscribe to Compound Thesis on our YouTube, Apple, or Spotify. And we've got all of our episodes on youtube.com/@Compound Labs. Share this with a friend and stay tuned for our next episode.
And you can find me at bitwave.io or at Pat White on Twitter or at Bitwave platform on Twitter. So thanks, guys.
Thanks, everyone.